When the margin is calling you, that's not the most romantic thing that might happen to you in your life. I had a decent experience with such calls in the past, so I have prepared 7 key lessons that I have learned in the past 7 years, blowing up many accounts. And if you're tired of blowing up your accounts or being at the break-even phase where you are not losing your account but neither making any profits, this video is going to help you. Hello folks, this is Islam with you. Welcome back to OP Investing. Here we help anyone who have an extra 15 minutes a day to scale their trading to 6 or even 7 figures without any complex analysis or being glued to the charts. So make sure to subscribe if you didn't already. Lesson number 1. You have to make sure that you have this if you want to catch a perfect trade. I guess it took me 4 days to blow up my first account. After that, I blew many more accounts, but there was something common that happened after each time I blew an account. As soon as I'm left without any penny, the following days I start spotting the perfect textbook setups. But the problem is that I don't have a capital anymore to take those trades. So for you to be able to catch a perfect trade, the only thing that you should do is to be in the game as long as possible. Preserving the capital, following the risk management is the crucial in this game. I have a good example of how does the probability game work. Just imagine a box with 100 balls inside. 50 of them are red, 50 of them are green. There's a little black hole where you can pull out a ball at a time, but you can't see the color of the ball that you are pulling out. So it's totally unknown, it's totally random. However, you know that if you repeat this for 100 times, there's going to be 50 green and 50 red balls. The same is true about trading. The outcome of the single trade is completely random because you can't see which ball you're picking, but you know your potential results in terms of 100 trades. So it's not logical to bet all of your money in one trade. Lesson number 2, control your emotions or they will control your trades. Imagine you're on a winning streak with your trades. Everything is going great. But then out of nowhere, the market turns and your profits starts to disappear. What you gonna do here? This moment is super important. Can you guess why? Trading can be tricky. The market changes like all the time and no strategy works perfectly every time. 1 minute you're doing awesome and the next you're doing wrong. Like here's where emotional discipline comes in. Think about the tightrope walker high above the ground. Like every step they take must be careful and steady. If they get scared or excited too much, they might fall. The same goes for trading. You have to stay calm and stick to your plan. If you let the fear, greed control you, you might make bad choices like selling too soon because you're scared or holding on too long because you're hoping for a big win. These emotional decisions can cost you money. Emotional discipline is super important in trading. It helps you to follow your plan and make smart decisions, even when things get tough. To build this discipline, make clear rules for when to start and when to stop your trades and follow them no matter what. The market will challenge you, but if you stay calm and stick to your plan, you'll handle the ups and downs like a pro. Lesson number 3, if you fail to plan, you plan to fail. I'm not gonna give you some general advices like you should have a trading plan, etc. Instead, I want to share with you a little story and talk about one component of planning that will actually benefit you. All of the time, I had a trading plan in my head. Probably most of you do. But when it came to the execution, I struggled. Most of the times I was not able to follow my plan or I saw that the trade happened only after it happened. Did you have the same experience before when you see the setups only after they happened? So then I started researching why actually that happens. At first, I saw that the strategy is not working. But the problem here is then why other people are making money using the same strategy? Isn't it weird? The problem was in me. That's where I stumbled upon 2 articles that talked about the 2 problems, but the root of the problems was the same. First was about the analysis paralysis. This is where you're just looking at the charts and you cannot even move your finger. You feel like totally paralyzed. The second is setup blindness. This is when you look at the charts and you don't see any patterns at the moment. It feels like you forgot everything you knew so far. Did you experience that before as well? So basically, all of that happens because the human brain is like a muscle. When you go to a gym and train, you get tired, you might not even able to lift your hand afterward. So the same is true about brain. After making 50 to 100 decisions, it gets exhausted and enters a state that is called decision-making fatigue. This is where the brain simply refuses to think. To protect itself, it starts working on the autopilot and starts making some impulsive decisions where you don't know why you did it. Does it sound familiar to you guys? So basically, to overcome this problem, we have to simply remove the decision making out of our trading plan. That can be done only by trading a mechanical strategy that is based on ifs. If the price does A, I will do B, etc. Secondly, you should have a clear plan on paper. And the good news is that I've got all of that and have prepared the free training on my mechanical edge over the markets. Just go through the link in the description of the video after you watch it and watch the full video about my strategy. Lesson number 4. Markets are always changing. I blew an account, backtested my strategy, fixed all the problems, adjusted my strategy to only blew another account later on. Why does that happen? I guess it really took me a couple of years to fully comprehend and adjust to it. Markets are ever-changing machines. Some patterns might work in a slightly different manner over time, so we have to keep journaling, studying the markets, and adjusting to the new market realities. In addition, there are 2 core states of the market. Not understanding it and using the wrong strategy might be complete disaster for you. The market might be either in a trendy mode or either in the range mode. Trend trading strategies will not work in the rangy market conditions and vice versa. So the lesson here is that you should have at least 2 strategies. One is focused on trading the rangy market conditions and second is focused on trading the trendy market conditions. Lesson number 5. Look at the trading from the bird view. Probably this lesson I learned about trading is a bit later in my life. You have to look at your performance not in terms of days, weeks, or even months. You have to focus on your trading performance in terms of a whole year. Trading is like a banana tree. During a year, you're going to have like 3 good months where you are going to absolutely crash the markets and make the most amount of money. On the other hand, there are going to be 3 bad months where your results are gonna suck. For the rest of 6 months, your performance is going to be average with some moderate losses and moderate profits. We can logically justify that as well. If during a month we have about 20 trading days and during the year that's gonna be 240 days, even if you get setups once in 2 days, that means you're gonna have about 100 trades a year. This is exactly how many trades are needed to let the edge to play out over the markets. So do not get discouraged if you are having a bad week or even a bad month. Stick to one strategy, do not tweak it much, and let your edge to play out. Lesson number 6. Test, implement, analyze, rinse, and repeat. My main problem when I just started trading was that I watched the video lessons with a strategy and then straight run place trades on my live account. Clearly, this plan was doomed. Let's imagine a tennis. 2 different people might have different results playing with the same racket. A beginner can't play as a professional straight out of the gate, even if he uses the tools that professional traders use. First, when you are learning a strategy, you have to go and backtest it. Decades of information is right at the tip of your fingers. You can get the experience as you have lived through years and years of trading. Only then, training your eyes and getting the data on your hand, you have to implement the strategy in the real life account. Most of the people, when they start trading, they don't even learn a strategy. They go straight into the markets and trade what they feel. By the way, I did the same when I first founded my account. Lesson number 7, over leveraging, but it's not what you think. Most of the people lose their accounts fast because they over leverage without even knowing that they've made this mistake. Over leveraging happens not only when you place a big lot size and take a big risk on a single trade, but even when you trade multiple pairs at the same time. Why this is a mistake? Just think about this one. What is in common like among all the major pairs? Right, they are all traded versus dollar. That means that all of them are correlated with each other. For example, if the EURUSD is falling down, that means that the GU and the AU is highly likely falling down as well, because these pairs are positively correlated pairs. That is because the dollar is getting stronger, and it's likely getting stronger against all of other pairs. So in this case, if you have placed a buy order on all of these three pairs because they all have more or less the same chart and risk 1%, here you're not losing 1% anymore. You're losing 3%. So don't trade correlated pairs at the same time. It will just lead to over leveraging and bigger losses. Focus on pairs and one trade at a time. And if you want to scale your trading to 6 or even 7 figures in the next 30 days, you have to watch this video.